It is a real difficult situation, and it is a bit of a chicken and egg situation, because last week what we ended up having was the BOJ came through and surprised the market by actually coming in and buying bonds. The conversation was really about where is the MOF going to come in and intervene. So we got surprised there, we got sideswiped, and the BOJ came in. And we saw once again, they came in, they bought bonds at the same amounts that they did back in August. Yet have a look at what ended up happening to bond yields. Bond yields ended up drifting higher. So I think the risk is that the more that the BOJ actually engages in actually trying to defend yields, the more yen they're going to have to print. So that weakens the currency, and then you get into this loop. So it is a very difficult situation. But if everyone's going to be talking about, you know, the MOF intervening into the markets, I mean, it's been so well publicised now that this line in the sand at 150, the whole point of trying to intervene in the markets is you've got to surprise the market. So it's either you go now, or you wait, and you wait to, you know, a level around 151 when markets aren't anticipating it.
Really quickly, just on that as well, considering that there is going to have to be a significant fiscal stimulus that is coming through, and it's all but flagged, that also then leads to more issuance. So is there any fear that, again, because they hold so much, the BOJ, in terms of the paper, there obviously is a little bit of domestic demand in terms of, you know, people playing the spread between the NERP and then, you know, what you're clipping 80, let's just call it 80 bips right now in terms of that 10-year paper. I would then imagine that builds the case for them not to move on the NERP. Because you want to create the environment necessary for, you know, the pension funds, for the domestic buyers to say, hang on, I'll buy this domestic paper and I won't engage in US Treasuries.
Sure. So I think the way that the BOJ can manage this is that they don't have to move all in one go. The way that TD is viewing it is, firstly, that they remove yield curve control at their December meeting, and then in January they remove NERP. I think it's a bit difficult to run both policies concurrently at the time, but our view as well is that the BOJ doesn't hike rates aggressively. We've only got 10 basis points of hikes being penciled in, so it's not a very, very aggressive hike schedule, and I don't think that the BOJ really wants to surprise the markets either.